using the RSI, Bollinger Bands, Fibonacci retracement. I remember all those late nights, be up all night worrying, and even early hours in the morning worrying about how the market's moving, whether I'm losing money, whether I'm gaining money, should I stay in, should I leave? A lot of emotions boiling up, and like I couldn't control it, you know, a lot of stress. Welcome back to Investor Prime. If you're new, make sure you subscribe and make sure you follow me at my social at Investor Prime on Instagram. Alright, let's get into today's video. Alright guys, the aim for today's video is really just to discuss some personal experiences I've had with trading, especially when I started trading. You know, what I was going through, what I was thinking, everything really. And I'm sure a lot of people can also relate because it happens across the board with new traders, like myself when I started. So when I started about 7 years ago, basically the only reason I started initially with trading was I heard that it was a great way to make millions. You know, you can make millions, etc. I've watched Wolf of Wall Street, all that, and I was like, I knew about the stock market, I heard about it. A friend of mine actually, their dad told me about a friend that they knew, basically became a millionaire trading Forex, owned his own plane, go out flying, etc. So I was like, I had a mansion, etc. So I was like, wow, that's the kind of lifestyle I want, you know, like I want to be able to do that, you know. And so I started looking into it, like Forex trading. So really thought that, I started off with a demo account, started placing orders here and there, like buy orders, sell orders, etc. And I was making a killing, you know, on it. And then, so I was making a lot of money, you know, like thousands, tens of thousands per trade, etc. And of course, the brokerage at the time, they gave me $1 million to play with. So, you know, it started getting to my head. I was like, oh, imagine that this was real money. You know, imagine my account balance with this. And I started thinking of all the cars I'll be owning, all the houses I'll be owning. You know, you see me in a lot of music videos, that kind of thing, like owning all those things. Expensive, basically an expensive millionaire's lifestyle, you know. So, and I thought that was really it. And what I wish I had known in hindsight, from what I know now, is that I wish I had known how much like effort you really need to put in, like to understand the markets, because it's very complicated. You know, it could be, you can make it as simple as you can, but it's still complicated. It's very uncertain. You know, you don't know what's going to happen. No one knows 100% how the market is going to behave. And, you know, so it's one of those, you can only do what you can to try to predict with a set of tools, indicators, etc. The time of day you trade, the security you're trading on, the market you're trading on, whether it's Forex, stocks, cryptocurrencies, options, whichever, they all have their own dynamics to it, you know. And you need to understand that it's not one shoe fits all. You know, you need to develop your strategy based on, mainly and most importantly, develop your strategy based on yourself, you know. And at the time, obviously based on myself, like my character, my risk tolerance, my situation, my financial situation, my social situation, you know. At the time I wasn't working full time, I was still in university, you know, and I was even doing anything related to finance. I was studying to be an engineer, you know. So it's like at the other side of the spectrum, you know. So it's all about knowing yourself, really, which is most importantly. But at the time, you know, the only thing that was on my mind was money, making money moves, doing all this, which was a very bad approach. And it became evident very, very quickly when I started losing money on the demo account, you know. And that's the part that people would never discuss, you know. They always talk about how you can make so much money, but really there's a huge risk involved in it. You can also lose a lot of money, doing it if you're not careful, with the market. It's not just money, what you can end up losing is a lot worse than the money. You can end up losing yourself, you start doubting yourself. You become a totally different person, you become stressed out, and people who are around you, especially loved ones, they're the ones that suffer because they don't understand why you're behaving, especially if they don't do trading themselves, they don't understand, so to them, you can just be out of line for no reason, and you can't even explain why you're behaving the way you're behaving. You can't tell someone, oh, look, I just lost. I'm behaving badly because I just lost, let's say, 30, 40 grand. It's going to make things worse because, of course, the person's going to be like, are you silly? Why are you losing that? You get what I mean? So a lot of the times, and I felt this personally, is a lot of traders, new traders in particular, and seasoned traders, I guess, they can feel very, very lonely. It could potentially be a very lonely field and way of making money to embark on, but it's very rewarding, when you can put everything together, so I'm trying to share my experiences with yourselves on that, so like I said, I started off with Forex trading. And I was looking at within Forex trading, of course, you've got your majors, your minors, currency pairs as they're called. So basically your majors are anything to do with the US dollar. So Euro US dollar, Great British Pound US dollar, New Zealand US dollar, anything really. And your minors are other pairs such as British Pound versus the Swiss franc, etc. And then you go into exotics. But again, I didn't know that. I thought one shoe fits all, really. So I thought, okay, what would work on the Euro US dollar market would work on the Pound Swiss franc market. What I didn't understand is they're totally different. There's totally different volatilities involved in them, like the British Pound, Swiss franc, New Zealand dollar pairs. They're highly volatile. They can move 200 points in a day, whereas the Euro US dollar would only move, let's say, 80 to 100 points a day. You understand? So you need to take into account the volatility, take into account the time of day you're trading. Whereas, like, for instance, if you're trading early hours in the morning on the British Pound, it's less volatile than if you're trading, bearing in mind this is UK time. If it's a lot different to where you're trading at lunchtime between 11 a.m. and 2 p.m. on the British Pound US dollar, let's say. Whereas at that time, both markets are open and they're overlapping. So the UK market is open. In fact, I should say the European market, because Germans, the Spanish, French, they all trade these currencies, all these banks, etc. So it's highly liquid, So of course, that's where you see most of the volatility, really, between 11 a.m. and 2 p.m. British time. So that's a lot different. So you need to take into account those kind of movements. Are you prepared emotionally to withstand those movements? I'll get into emotions a little bit after, because it's key, I believe, to being successful as a trader or an investor, really, of any kind. So, but you need to prepare your mind for those times. And there's other things to take into account, like what you're doing. Like if you work full time, you don't have the time to do trading, to sit in front of a computer screen, to be looking at the markets, to be worrying about what you're doing. So there's two main types of traders or investors. There's the day traders and then the swing traders. So you need to understand which category you fall into. Like, I didn't understand this at the time. I didn't know all of this. So I was doing a lot of day trading, and then I quickly realized that it's not for me. My emotions wouldn't let me be successful day trading, because I love money. Who doesn't? You know, that's why a lot of people get into trading, right? I don't like to lose money, you know. So those two things were highly destructive to me. You know, those two traits, characteristic traits of myself, were highly destructive, you know, for day trading anyway, because you're looking, you place a trade, it can move a lot of points, you know, because you don't know what's going on, like what the banks are planning, where they're positioning themselves, etc. for the long run, during the day. So the markets move. Whether you like it or not, they would move wherever they're going to move. You have no influence whatsoever unless you have billions of dollars to invest in it, and then you can physically see where you're influencing the market. Other than that, you really are at the mercy of a lot of banks and hedge fund managers, people who have hundreds of billions at their disposal, you know. Okay, so with day trading, really, so you're looking at, there's different time frames on charts. Okay, when you look at charts, so you could go from 1 minute, some platforms even take you down to like 30 seconds, you know. But anyway, on all charts, you've got the 1 minute, 10 minutes, 15 minutes, 30 minutes, you've got 1 hour. They're all could be considered as day trading, you know, because it's quick in and out, you know, like that's the way it should be, you know. So I was doing a lot of those, but I was getting in on maybe on a 15-minute chart, but I was looking to hold positions over a couple of days, which is not wise to do because you don't know what's going to happen. You need the longer time frames. So the longer time frames could be 4 hours, daily, weekly, and monthly, you know. So, but I didn't know all of this. I was just sticking with, okay, let me just, all I knew at the time was to buy or sell. You know, I didn't know anything else, you know. So that's all I thought, really, all I needed, you know, because I was too busy picturing myself in a Lamborghini driving up to my mansion, you know, like because I just made 2 million on one trade, you know. But anyway, so I was focusing on every market, different markets. I was even going into exotic markets like the pesos versus the dollar, you know, like it wasn't really good, you know, because I didn't know anything. At the time, I was looking at the Euro New Zealand dollar currency pairs, and I was also looking at Euro US dollar, and I was looking at the pound Swiss franc pairs. You know, they all work differently. You know, people spend years studying one currency pair before they become successful, but I'm thinking I can just do everything in the first 10 minutes, you know. So I was looking at all those, but I didn't know how they would behave. I didn't know where to get financial news on these countries or these continents that I was looking at their currency pairs on. You know, like I didn't know what was going on. I just saw buy and sell, looking at the chart. Okay, it's going up, let me buy. It's going down, let me sell. You know, kind of like being a sheep, following other sheep, you know, instead of trying to be the shepherd that knows where directs the sheep or knows where the sheep are going to be, you know. So, and then also most importantly with the markets, it's all about supply and demand. If you can understand where the demand is going to be, you can get in early. If you understand where the supply is going to be, you can get in early, you know, and ride the trend down, ride the trend up, you know, rallies and sell-offs, basically. You know, so I didn't understand a lot of these. So in hindsight, I wish I'd sat down, educated myself, tested a lot of things. In my favor, I would say where I'm proud of myself really is that I was using demo accounts for a long time. I never put in real money. Well, to be fair, I didn't even have real money to put in, you know, but I used a lot of demo accounts just to play around and see, get my feet wet, you know, so to speak. And then later on, I started trying to educate myself, basically going on YouTube, seeing people's strategies. Like people will be like, okay, I used the RSI, how I made this in the RSI. So I'll be like, okay, I want to make that, you know, let me do exactly what they're doing, step by step on the RSI. So they're like, okay, you sell, you buy when the RSI is below 30, you sell when the RSI is above 70, you know. Seems simple enough, you know. I'll I'll go and try to implement that, you know. But one thing I didn't realize about myself was I was quite impatient. You know, you need to wait, sit and wait for the right time. So what I would end up doing is I'll be like, okay, the RSI is at 69. Oh, that's close enough. Let me sell. And then it continues climbing till 80, 90, you know, more like 80, you know, 90 is like highly overbought. But anyway, so it'll continue climbing, and then I'll be like, oh, I haven't set a stop loss. At the time, I didn't know anything about stop losses, so I'm at the mercy of the market, you know. If that was real money, I would have been looking at my account like minus 120,000. I'll be like, nah. You know, that's a lot. Like, emotions will easily set in and logic will be out of the window, you know. So then I realized, okay, I learned about stop losses through another YouTube video. So I was like, okay, let me try stop losses. So I'll do the same thing, you know, thinking, okay, let me get in really early. It's near 70. Let me get in so at least when it comes up, I can get more profit. If I was always scared to miss out on an opportunity, which is a very dangerous thing or trait to have when trading. Is very dangerous, destructive to your account balance. And if there's one thing you take away from this video, is do not feel the need to always be trading. You know, there's a time to trade. There's time for everything. Same applies to trading, you know. So, but anyway, so I started setting stop losses. I'll be like, okay, let me put the stop loss. So with Forex, I'll be like, okay, let me put it 50 pips away. Let me put it 20 pips away. Let me put it 10 pips, see what's going on. And then it kept triggering my stop losses. And I'm thinking, oh my God, these banks, they know where I'm setting stop losses. Oh, they're coming after my money, you know. And then I thought, well, how would the bank know who I am? You know, the bank, they've got billions. They're not going to be coming after my £2, you know. So I'm like, okay, all right, let me try something else. Let me do 100 pips, 100. But I'll just be trial and error, you know, without understanding exactly what I'm doing. You know, now picture it, right? Imagine you're driving a car. You go on, you've got the pedals, you've got your, let's just say automatic, you've got your brake, you've got your accelerator, you know, and then you've got your gears that you put in drive, etc. Right? So let's say you just get into the car for the first time. You're like, I'm gonna start driving like Lewis Hamilton, right? I'm gonna be a great driver. You get into your car, you want to move forward, your car starts moving back. You're like, why is that? But you put it in reverse, expecting it to go forward. You know, so the same goes with trading. You need to know how to approach it. If you want to move forward, you need to put in drive. You know, if you want to move back, take a step back or leave the market, leave it in neutral. So it's the same with yourself. You need to understand the right times to trade, the indicators to use. And I'll get into indicators a bit because that was a heartache for myself, understanding which ones to use and which ones not to use. So you need to understand the indicators, the time of day, the type of trading, the type of approach you want to take to the market, and not just getting into the trade. You also need to maintain that trade and then get out of the trade, because let's face it, even if they're saying your brokerage is saying you have $1 million in unrealized profit, that's not your money until you leave the trade, you know. But are you going to wait until it's 2 million, 3 million? Or are you going to cut your losses now? Or are you going to set your stop loss to 500,000? Are you happy with taking 500,000? You know, those are things you need to take into consideration when trading, you know, and it's things I didn't take into consideration. I was always only thinking about money, etc. And another thing I didn't realize was very important. In fact, the most important thing, again, if you want to take away anything from this video, is this: emotions. You know, you need to get your emotions under check, which is ways, we're all human. You know, you might say, I'm the strongest, I'm the most emotionally intelligent person. But when money comes into play, when greed, fear come into play, all your intelligence is out the window. all you're left with is emotions. Trust me, I've been there. You know, doing engineering, it's not an easy course. I excelled in that, you know. But when it came to trading, I was making really stupid mistakes that afterwards I'm like, how could I make that? You know, I'm here designing like highly complex circuits, but I'm making silly mistakes with something that you just buy and sell, you know. So what I realized is it was my emotions coming into play, and part of that was I was trying to be a day trader when in actual fact my emotions would allow me to be a swing trader, because I don't want to be looking at the markets 24/7. I don't want to be sitting in front of a screen 24/7, because another reason, as well as the money, another reason I wanted to do trading was the flexibility. I want to be able to go somewhere, go on holiday, be chilling, you know, I'm on the flight and I've just made a couple thousand, you know, or I've made back the cost of the flight before I even land at my destination. You know, that flexibility, and also you have time to do things, you know, your mind is not occupied, you know, with other, but it's counterintuitive if you spend all day on the computer trading, you know, there's no point. At that point, you can call it gambling really, because there's no logic, it's just pure emotion, you know. So that emotions got the better of me at the time, you know, because like I was saying, I was day trading when I really should have been swing trading, you know. Now, day trading is when you're trading short term in and out. Swing trading, you're holding it for a couple of days, depends on how long. You can hold it for one day, for anything from one day even up to a year, you know. And again, depending on your style or strategy, you need to be in the right time frame. I can't say, okay, I wanna buy the euro against the dollar if I'm forex trading. I want to buy the euro against the dollar, okay, because I predict the euro is gonna do well, very well in the next year. You know, like with everything, like Brexit, with what's going on with the pandemic, everything, all that will subside, or maybe it will just stay in the United States or places where the dollar is the main currency. It will just stay there, and all us Europeans, everybody will be chilling, you know, we'll be good, and that will drive the euro up, you know. I think in a year that's going to happen. I'm not going to be in a 30-minute chart and get clear, concise information and signals to trade, to pull the trigger on my trade in 30 minutes charts when I'm looking for something that in a year's time. You know, I need to look at something more profound, like on the monthly chart or the weekly chart. You know, at least that way it'll give me a lot of time to position myself, set where, okay, if it goes against me, I'm happy to lose. Well, not happy, no one is ever happy to lose, but I'm okay with losing this amount, you know, and I'll be on to the next opportunity, you know. But if it goes in my favor, then I'm even happier because I can gain this amount, you know. So that's with that being a long-term trade. And another thing with my emotion, me being impatient at the time, I'm no longer impatient, because obviously basically have to fine-tune myself really and my mind especially for trading, prepare for everything, every eventuality. And basically the way I approach it is hope for the best, prepare for the worst, really. So now at the time though, with my impatience wouldn't allow me, I'll place a trade, logically thinking my approach, I'll be like, okay, I'm gonna hold this for a week. I believe in a week's time or 5 days, at least more than 3 days, this is gonna happen, because the market is gonna settle, and then buyers, if I'm long on it, buyers will kick in, raise the price up, or if I'm short, sellers will kick in, lower the price. And so I was like, okay, so I don't know fine well I'm gonna hold this for more than 3 days, but I'm leaving like that morning, the early hours of the next morning, I'm exiting my trade, you know, because it's gone against me a little bit and I'm worried. I'm like, oh my god, it's close to my stop loss. The trade at like 2 a.m. the next morning, you know, and then because it's been getting close to my stop loss, should I move my stop loss down? Should I keep, but which is also something you should never do. Whatever you plan before you take the trade, stick with it. Regardless of what happens, just stick with it. You know, cut your losses short, ride your winners basically, and cut your losses short. So, but those were the things I was thinking, and I'm like, you know what, I can't take this. Even though it was demo money, I was like, I can't take this loss, I can't take this loss. Only to find that 4 days later, the currency price has more than doubled, you know, or at least gone up 300, 400 pips, you know. And I'm thinking, oh my God, why didn't I just hang on? You know, why didn't I just ignore it, keep myself busy, go and do something else, keep my mind busy, you know, just ignore the market until it's time to check 4 days later or a week later, you know. And so those were really hard blows. Like, if there's one thing that's worse than losing money, is getting out early on being right, basically. You know, that I believe that's, for me personally, it was a very hard lesson to learn. And I believe that's the worst lesson to learn for traders, you know, because there's nothing worse than being right and you get out early before the move you're hoping for happens, you know. Because trust me, with trading, you're going to be wrong a lot of times, a hell of a lot of times, you know. So when you're right, why not leave it, you know? Because if you're losing, for me anyway, when I was losing, I wouldn't mind holding it on in the hope that it corrects itself and starts going in my direction, you know. So when it's going in my direction, why not leave it in the hope that it continues going, you know, and just position myself to take profits, you know. Instead of making 100% profit from my take profit, why not make 25%, 50%, 75%, whatever. Or you don't need to make the whole 100%, you know. It's all about gains that you're making, you know. So why not take those by stop moving your stop losses up. You should never move your stop losses down. Move your stop losses up. You know, that's for buying. If you're selling, never move your stop losses up, move them down as the market. Move them with the market, you know. Whenever the market decides, okay, that's it. You've made enough. I want you out of this trade. It will kick you out through your stop loss. You know, you should never kick yourself out. Let the market decide what it wants to do with you. You just prepare yourself for the trade. Take it. Forget about it. Well, don't forget about it, but maintain the trade. Not by getting out physically, etc. What I mean by maintaining is moving your stop losses where with the market, basically. You know, and that's another thing. Never trade without a stop loss. I've been there on demo money. I've lost a lot of money. The amount of times I blew up my demo account, I must have looked stupid going to my brokerage like, you want to give me an extra million? Because I just lost that million, you know. I don't know. You know, it's like my emotions got the better of me, you know. I need to be more intelligent, you know. So luckily that was demo money. You know, you can't do that with your real money. Go to your brokerage and like, you know, I lost all my money. Can you give me back money? You know. And another thing is, with the market is, with real life trading anyway, you're trading against someone else, you know, so it's a competition, basically. You're trying to know something the other person doesn't, you know, and you're trying to position yourself in such a way the other person is not positioning themselves. So you've got everybody in the market, the novice traders, the beginners, the intermediate, the seasoned professional traders, which I guess could also be intermediate traders, and the banks, hedge fund managers, the likes of George Soros, Warren Buffett, them. You're in competition with those guys, you know. So you need to understand what they don't know. And also, that's where I started trying to figure out where I can get information, like financial news information that's worthwhile. Because there's a lot on the internet, there's a lot of information. Not all of it is good. A lot of it might be very good, but it might not be good to your strategy. So you need to understand. For me anyway, what helped me with deriving at my strategy was understanding myself, understanding where I was going wrong, what was holding me back, which was my emotions, my impatience, etc., and my lack of education with the market. Really, that was it. You know, I guess I was a bit egotistical before, thinking, I'm doing a very demanding, difficult course and I'm excelling at it, like engineering. It's not easy at all, you know. So I was thinking I could do this, so I can easily beat the market, you know. So I had to understand myself, understand my situations, etc., come up with a strategy around my character and also a strategy around the market, you know. So I figured out quickly that I was better at technical trading, technical analysis than I was with the fundamental, which is you're looking at news. You place trades based on news, like if a president of a country speaks, how that's going to affect the currency, or if a CEO of a company speaks, how that's going to affect the share price of a stock, you know. So with that, but I was better with the technical side of things, technical analysis, which was using the RSI, Bollinger Bands, Fibonacci retracements, everything, basically, and seeing how you can put them together and they can complement each other, you know, because you can't use the MACD with something else that doesn't work with it. You can't use an oscillator with a trending market and expecting them with a trending indicator like the Bollinger Bands and expect them to be the same. But you can use them in conjunction in some way that they can complement each other, you know. So those are things I didn't understand. There was a lot of information that I had to digest for the market and everything and myself, you know. So it was a very, very long, lonely, a lot of the times hard roads, you know. But it was very, like, I grew a huge passion for it, because for me it became a game, you know. I had to complete it, you know. I had to prove the market that I can beat it. I can come up with a strategy that I can make money in the long run, you know. I can be better than the market, you know, for me mentally. And I guess that gave me the inspiration and the self-motivation to keep going forward. A lot of people give up, you know. So it's one of those, you need to understand yourself, really understand the market you're going into, and basically how to get the right information for it and when to get the right information. And in the course of basically this channel, Investor Prime, I'm hoping to help you guys as well as help myself, because I can learn a thing or two even more, you know. I can also learn with yourselves of all those things. I'll do videos on where you can find information, how you can use technical analysis, which indicators you could use. I could do those specific videos for each indicator, because I believe there's so much information involved in those, like how to use them, how not to. Well, I'll talk mainly how to use them. At least you have a good start, you know, and coming up with your own strategy. And lastly, really, is you need to basically give yourself time to learn it. You know, if it's going to take you 6 months, a year, etc., give yourself time, because it's worth it at the end, you know, when you can understand it. Don't say, okay, I'll keep trying this, I'll keep doing. Basically what I was doing was I was just seeing different videos, hoping someone out there would do a YouTube video or write a blog or something about the holy grail of trading, like do this and you'll be 100%. There's no such thing, you know. You need to put in the work. I needed to put in the work, you know, and it was very difficult. Alright guys, if you like this video, make sure you like, comment and subscribe. I'll be coming out with more consistent content, you know. And you can, if you need any help or any questions or advice or anything really, if you're new to trading particularly, or even if you're seasoned, etc., but you're just trying to fine-tune your strategy, you're trying to put different indicators, you want to know where to find certain information, if you're doing forex, options, stocks, cryptocurrencies, just email me. I'll put my email address below, so let me know anytime. I'm more than happy to help. And if there's any particular video you want to see, let me know. Like you want to see, okay, how to use the Fibonacci retracement properly, let me know. in the comment section. Alright, thanks very much for watching.